Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw buyers active at the 90 half to 92 half zone, and that resulted in a pushback up towards 2104.75. At this point, heading into the open, as long as ES can hold above the previous VPOC of 96.75 and the 98 to 2100 half initial support zone, it would be an indication that even on the smaller time frames, the buyers are in control, and that can lead to a move back up towards 0475 to 06 quarter and 0875 to 1075 with potential for a break above that area. And that's something that we will have to gauge in real time to see whether there is sufficient underlying strength for the market to actually break out above 0875 to 1075. But at this point, considering we have already seen a pretty decent reaction at that zone yesterday, at this point, if we head back up there and we are breaking above 0475 to 06 quarter, then initial resistance may not hold, and it could lead to some higher prices. On the downside, a break below 96.75 and 98 to 2100 half would be a warning sign for buyers. It would signal short-term weakness. It does not necessarily mean that we have to completely liquidate, but it would be a signal indicating lack of strength. From there, on the downside, we have 90 half to 92 half as the bottom of the recent 2 to 3 day range, and the bull bear zone is 88 to 89. So those are still areas where responsive buyers can be active as long as we're not going down on heavy downside momentum and excessive weakness on the advanced decline and the other markets also breaking their recent lows. So as long as we're not in a liquidation type market or a trend down scenario, which is not the expectation, then buyers can still defend 88 to 89, 90 half, 92 half, and the market can continue essentially balancing in the range from the last 2 to 3 days. Now, if we break 88 to 89 or 90 half to 92 half, then we could get some short-term liquidation because that would mark a break below the recent 2 to 3 day balance, and from there we can go down to 83 half to 85 and the breakout area at 78.75 to 81.75. Now, given how bullish the larger time frame bias is right now, responsive buyers can still be active at the support zones below 88 to 89, with the higher probability support area being 78.75 to 81.75. So even breaking this recent 2 to 3 day range does not necessarily change the bigger picture bias, which would continue to be bullish. And I'm only reviewing the downside scenario in case this ends up being a failure at the initial support or at 96.75. Right now, that is not the scenario that's in play. At the moment, the buyers are in short-term control, and we already know they're in control on the larger time frames. So off the open, unless we are seeing some clear signals indicating a weaker market, we are still going to keep our focus on the long side and continue leaning on that bigger picture upside directional bias. So 98 to 2100 half is going to be an important zone off the open. The prior VPOC of 96.75 is going to be an important level of support off the open, and as long as we're holding those key areas, there is still potential to go higher. And like I said, unless we see clear-cut signs showing us that the sell side is aggressively entering the market, we are going to focus on longs. Now, at this point, the market is stuck in a balance until we actually break the range, either to the upside above initial resistance or the downside below 88 to 89. So within that balance, we can get continuation of this two-sided movement until we actually get a break. But because of that bigger picture bullish bias, it's still better to lean on the long side until you start seeing some very clear signs that the sell side is really entering in a more aggressive way. So far, every downside move that we've received or that we've seen on the day time frame has been very short term, and it's really just been a small pullback within the context of a overall uptrend. So until we see some really strong selling or excessive weakness, it's still going to be better to lean on that overall bullish environment and continue to focus more on the long side. Again, it doesn't mean that we can't short. There were some really nice short setups yesterday, but now that we've seen that reaction at that resistance zone, at this point that zone is kind of used up, and we may not get the same level of response when we go back up the second time around. So we can take short setups on the day time frame. As a day trader, you need to be willing to go long and short, but the preference and the priority is definitely going to be on the long side, and we will be cautious and more conservative on the short side. Aside from that, there really isn't any major economic catalyst scheduled for later today, but we do have the non-farm payroll report, jobs number out tomorrow morning, and that can add to the two-sided nature of the market right now, just because the major catalyst is due tomorrow. So that just lowers the chance for a big directional move ahead of it. Again, anything can happen, so read the market in real time as well. Don't discount that. But given that the main catalyst is due tomorrow, it's more likely that ES will either continue balancing within this recent range, or break out, test 15.5 to 17.5, find responsive sellers there, and then start balancing again. So those are the main thoughts heading into the open. Let's see if the buy side can maintain the short-term control above initial support and above 96.75. That'll help set the tone for the day, and we'll take it from there.